Hi, this is Tom Nunamaker with the Armor Corporation. I'm starting a new thing. I'm going to do recaps of some of the daily trades that I've done. We just closed this. This is March 2nd, 2023. And let me just show you what we did total. Here's the day we had a Jim Olson style iron butterfly at the open. Did three of them. Made $360 in about 20 minutes and 30 seconds. And then I did another slightly modified one, uh, 39.40, 39.35 short strikes. I split the strikes by 5 points and made another $81 in 5 minutes. And let me just show you those trades real quick. So here's my fill history. So I'm going to analyze this. Now there are three of them. And three in. And the market opened up at, well, it was about here, about 39.33 at the time. So right about here. So this was the center strike at the time. And I should have stayed in. I'd be up $700 now. But we're using some risk management. So I scaled out of the position. I sold for 24.10, closed the first one at 23, then 22.90, 22.55. So here's after the first one was closed, margin got cut down from 77.70 to 50.70, and another one. Now it's down to 23.60, and here's the final 385 minus commissions. So it was 360.109 total with commissions. So that was this trade. I did have an order to close one of the shorts because we did start heading lower. So what I was doing is I had what was it, the 39.85. So if I model that, let's buy a single put. Yeah. Well, the prices were way different. But anyway, that was the idea to start taking out some of the risk. If we started moving lower, I wanted to lighten up the delta. So I would buy back one of the short puts. And then that would lift up this downside and cut the deltas down. We still have a nice profit tent and good theta. But I didn't need to do that. I had the order ready like this, and if it was something I was going to actually put in, I would just right click, create duplicate order, or just confirm and send it right from here. So that was the first trade. Again, took about 20 minutes and 32 seconds start to finish. And then I put another one on after that. Let's see, I closed that at 51. So 5 minutes later, I put on another one. Let's take a look at this one. And I split the short strikes by 5 points in the market at, what time was that? 56. So 56 would be, yeah, here. So it looked like it was kind of bouncing in a range here. So I wanted to split the strike. So that's why I changed it to, instead of just a pure butterfly, a very, very narrow iron condor. It's essentially a butterfly, but you're just moving the strikes apart by 5 points. And again, that would be up 390 if I'd stayed in, but the market looked like it was moving higher. I had a profit, and then I saw this big push up, and I thought, well, it could be trending higher, and I had some profit. I didn't want to give it away. So I decided just to close the trade. So I put in an order. I opened it up at 2020 and bought it back for 1985. So that was $105 minus commissions, and the net on that was 81. So it was about $23 of commissions for a 3 lot, and I'm paying $1.09 a contract for SPX. So one of the things we use for these Jim Olson flies is I've got this narrow iron condor expediter or nice spreadsheet, and it helps us enter the trades. And these buttons are great because you can do all kinds of stuff with them. But for instance, if I wanted to put on an iron fly right now, 50 wide, it's load that row. Now these are the strikes, and I could just go create opening order, go back to Thinkorswim, and let me just delete these. Go to the order entry, we'll paste, I'll right click, analyze, and take a look at it. And there's your butterfly order. So then all you got to do is send it. And then after you've got the order in, one way you can manage these kinds of trades is to start closing down the risk on one side. So you could put stops in. So for instance, these are the prices. Let's see, let's set this. Okay, so it starts out with these prices. Now you got to put in your fills. So the fields with the blue background are fields that you type in. And then, so this would have gone from 12 to 1270, 1030 to 990. And then we monitor like a mark to sale ratio. So whatever price we sold this put at versus what it's currently trading at, you divide this by that and get a ratio. So 1.05, and this is 95. So the market's moved a little bit lower. You can see that the SPX has moved down 61 cents since I clicked on this create opening order button. And then we use these ratios to define points where we're going to close this. So if this gets to 1.35 times what I sold it for, so 12 times this is this, then we'll put a stop in to close that put at this price. Another stop here and another stop here. Same thing with the calls if it starts moving against you with the calls. So you can do things like this. Just click here and then I'll turn on this show confirmations. So that puts this order into the clipboard. So with Thinkorswim, you can come in here and just go paste, and there's your stop order. So you can do these one at a time, or you can do all of them. So you can do all of these like this. Now you're gonna want to do a blast all. So let me delete that, and then blast all, paste. And now there's all the stop orders for your puts at the different prices, 1620, 1821. 1620, 1821. Now if you do all shorts, like this one, now you've got 6 orders in the clipboard. So let's delete that and paste, blast all. There's all 6 of your stops. Hit send, boom, done. So it saves a lot of time. You can do different things like if you do a 3 lot like this, you can roll the shorts or the whole side. So you can roll all the calls, all the puts, and how far do you want to roll them? 5 points, 10 points, 15 points, up to you. For instance, if we roll all 3, and let's just do the short calls by 10, and like this, paste in this new order and analyze it. Let's take a look. So I would take your original trade and we're going to roll the short. So let's take a look at the longs. The longs are at 39.90. We put this order in. 39.90 still the same, but now the shorts are at the short calls are at 39.50. And you can see it went from 40 to 50, and that would cost $5 to do that. It does lower your profit potential. Here you're up at the top at 6,200, and now it's down to 4,800. But you've also reduced risk on the upside. So now you're 71.70 margin on the upside, 10,185 on the downside. And you started out at 86.85 on both sides. So you're basically taking risk off as the market moves higher. You're buying in some of these shorts, and then you're tightening up the distance between here, and you're just kind of adjusting to what the market's doing. So anyway, I'm going to do more of these, just quick updates on the day trading and show you how we're using the spreadsheets and all that. So hope you enjoy it, and let me know what you think. Thanks.